Good day. Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for Wednesday, and we're at the 1st of June, 2022. Interesting day in the sense that the JOLTS data, of all things, when that came out, the market turned around and started dropping in stocks. It had been up, and then it turned down because the market's looking at the first numbers that said maybe the job tightness, the first cracks in it are starting to show. Now, we had other ISM data and all kinds of other data today that I think was just mixed. Manufacturing, which side of the story do you want to argue? That we're still seeing, if you will, pickups in certain parts of it. Prices paid still going up, inventories rising. I don't know if that's bullish at this point. So you're seeing what's going on. The biggest issue that seems to be happening, though, is corporations are having trouble passing on price increases. We saw a lot of talk of that if you saw the beige book that came out. And if you get my full written research, which is part of my paid subscriber, my full research subscription, I list all the different districts, and that is a very common thing. James Bullard's still talking that the Fed is behind the eight ball, still got to make a bunch of rate hikes, but the market is doing the job for it. In other words, the marketplace is starting to feel all these pressures before the Fed even embarks on the 50 basis point hike. I think we have the Fed meeting coming up around the 14th of June, and we're also seeing the QT, not E, QT, quantitative tightening, where the Fed's now going to let go of Treasuries and mortgage-backed securities and let them run off. So let's go to the charts and let the charts do the talking. We've had this heck of a nice run in Zoom, and the market today backed off a little bit. You have a pattern of higher lows. You certainly have higher highs. This has been what I call a vertical price rise, as you had 1, 2, 3, 4, 5 days in a row of higher highs, and today's the first day with a bit of a drop. The market did not make it up to the 100-day moving average of closes, but it certainly ran into a brick wall at the upper Bollinger Band, this dashed line, the black one. Now let's understand what a Bollinger Band does. It is an algorithm that is built and designed to keep the markets trading within it 95% of the time, which means when you hit the upper band, you're hitting a resistance point, and the lower band, a support point. Now, there's a way to work with that. I teach it in my enhanced Bollinger Band course on our website under the word education at www.iraepstein.com. When you take a look at momentum, it's overbought. So let's back up a moment. Uptrend goes up to the upper Bollinger Band, running into serious resistance, and is now overbought. Overbought doesn't attract new buying typically. You have a market in AMC, lower low, higher high. You hit the upper Bollinger Band, and boom, you're down 10% today. If you can't rally AMC and other movie venues on the Maverick film, the Jurassic Park that's coming up, and you can't get them going, I must tell you, you are looking at markets that are going to start going to new lows on these moves because they're going to be burdened with not as big of cash revenue coming in as the summer comes to an end. Having owned a movie theater, having operated it, not just a passive investor, I know the game. And the game changes as the summer's going to come to an end. This is the meat and potato time. You got to make your money right now in it. I think a lot of people have AMC on the how do I put this, in the headlights, that there's going to be financial problems. Will they survive? That's what I believe. I keep reading stories about it. I'm not making it up, and not because I own the movie theater. I certainly left that business with a bad taste in my mouth. Lower low, higher high, market sitting here. Now the question is the pullback to the 18-day average. This is not a trend. It's a nice bounce, quickly getting overbought. I think that what Apple's saying is, hey, guys, I am not really worth being under 130 at any point, but am I ready to just rock and roll? I don't think so. That's what I think the message is. In Disney, get up to the upper Bollinger Band finally. I have been waiting for this, and I've been telling you, I thought that this would come alive, but that's a natural resistance point. You do your homework. Unless you get embedded readings, when you touch these bands and you're sitting here like in an oversold condition, boom, You don't just fall apart. You've got to develop the embedded to keep going. Well, it's the flip-flop when you're going up. On this run, you've used a lot of power. You get up to that number, the pros are looking at it, the algorithms are built with it in it that are trading for people, and they're looking at that saying, okay, let's take some money off the table. In the financial service sector, I thought that yesterday was the peak in the market. I know I said that to you in the evening. I said, I think the pros came out. Go look at the video. It's there on YouTube. And here you are down 2% today. I still want to say that. I think that the pros came out up there. That doesn't mean I've turned bearish, but I don't think that you want to be bullish up against that number anymore. And XLI, the industrial sector, starting to roll. It didn't like those numbers today. I didn't either. I was questioning them, and I said that in my newsletter. But you don't have a sell signal. You've had a nice run to the upside, and you've gone into a stall. Not a sell, not a buy. Semiconductors, what did I say just yesterday to you? I said, I think you're at the point where it's time to abandon the long side of those markets via overbought to the upper band. Well, outside day down. I am not bearish. I have no reason to be bullish, though. Got a lower low, a higher high. I see the market in a sideways band right here for the near term. Home builders. Hard to get overly excited about the home builders when you have these inflation prices that make new homes difficult to build and for the builders to pass on all the prices. I'm not saying it can't be done. I'm saying it's more difficult. There is a housing shortage. We know it. But there's also high mortgage rates. High mortgage rates price out the people that best need those new homes, those smaller homes, and that's what the home builders like to build. And you got a bit of a problem. I don't see anything new that I'd want you to do there. On the energy sector, Spider, you're up to the resistance at the upper Bollinger Band. I like this market. I was telling traders today that until the red line closes under 79, I think that on these breaks, you buy the market on these breaks, looking for the market to hold and try to go for the highs one more time. GLD, it has fallen into the support. You heard me, the support of the 200-day average in gray, the red, the 18-day average, the trend down, the bias up, momentum flat, and you're just starting to go very much in a sideways pattern right here. You would think with inflation, gold would be better, but it's just been a real nightmare of a trade. GDX, again, fighting and going every day on this 18-day average. The resistance is pretty clear. It's the 200-day average in the upper Bollinger Band. So from this, let's call it 33.16 is the 200-day average, the upper Bollinger Band, 33.71. That seems to be the battleground the market wants to fight at, but not seeing anything new there. As much as I like copper long term, I'm not convinced that this is where you step in and you buy the market in this overbought area. I think there's better places to be. The trend is up, the bias is up, it's too overbought. Resistance pretty evident here at 41.13, the 100-day average, and 40.94, the upper Bollinger Band. AGG, you got up back here. And this, when you hit that, I said, that's where I think the pros came out. I like the idea of being short, not long, because I want the Fed on my side, not working against me. And the Fed's going to be doing what? They're going to be raising interest rates until they get it right. Well, that is not typically bullish for AGG, BND, TLT, and all those. I was surprised the dollar got as strong as it did. I actually today got for the first time bearish in a while, and it looks like I did it at exactly the wrong time. On the settlement and the embedded reading, you still have it. You're either down hard tomorrow or you're going right on up to this 18-day average. It's all going to happen, in my opinion, early in the morning, so I'd be watching that. And in FXE, well, this is why I still got something to hang on. Until the red line closes under 79, this pullback was a buy there. But I told traders, and I'll say it to you, you don't go into FXE and UUP. Trade one or the other, which of the chart looks better, because the dollar index is made up of 40% weighting of FXE. So you play them apart from each other. You know, I talk to you about what I say in the morning to my subscribers, and you don't see that on YouTube. But at 9 in the morning, I start recording. I'm posted about 9:40 to 10 o'clock in the morning, depending how much data comes out. I like to let the first half hour of trading go by the market. And the reason is that's when the algorithms, the earnings numbers, everything, there's just so much coming out in government data before 9 o'clock that I let it settle in and then I trade it the rest of the day. And the markets I cover, these are just some of them. I'm rotating all the time. Like you don't see Zoom here, and I just covered Zoom for you in this, but you'll see that I do rotate around. The idea there is to give you a full package that you can play with. And I tie a lot of it to what I do in the futures video in the morning because, you got DIA, SPY, they're all tied to the futures, 100% direct. So you put it together, see what it goes. You're going to get some bonus videos from me from time to time. I wish I could tell you they're weekly. Right now, they're not. You're going to get ideas. Yeah, I've been around this since, let's see. I've been doing this in the 60s. It's hard to believe, isn't it? But that's what I've been doing. And it's been fun. Fundamental and technical analysis, that's what you get. How does it start? Well, it's simple. All you need to get it started is follow me on this. On our website, just go up to the word research. Everything's there that you need. If you're going to stay here and follow this, just take your cursor, follow it right to the top, give it a click when you see the icon. That'll take you right where you're at. You'll be set, and I'll see you in the morning then. I'm Ira Epstein. You have a good day. Take care.